Okay. Good morning, all. We talked to you as part of our self-isolation measures. I'm sitting remotely today without a video. But we're here, so we are part functioning, and that's, I guess, quite relevant in today's business world where we are only part functioning in many respects. Today's webinar that we're bringing to you is about COVID and the government stimulus measures that exist and what they mean for your business. We come and talk to you today in what are unprecedented times. There's a health pandemic with the coronavirus sweeping the globe, and the economic and financial impact of the government restrictions are being felt by one and all. The media speculation has been intense, and the government has been relatively swift to react. That reaction has been in the form of stimulus, which is at a level never before seen. And the almost daily release of this stimulus information has perhaps caused more confusion than calm in many respects. So today we wanted to help explain some of the stimulus in more detail, particularly focusing on the JobKeeper stimulus benefit, which received parliamentary assent overnight, but also some of the other key stimulus measures that are available for almost all business owners in some way. There is a benefit there to be accessed, but you need to act in order to do that. We bring to you today a guest speaker who is part of the Shakespeare team, Andrew Smith. He joined us prior to Christmas, and he brings 2.5 decades of experience across a number of preeminent businesses around Australia. He remains a senior tax technical trainer for the Institute, the CA Institute, who is our governing body. And as a result, he does get direct line of communication from Treasury and gets regular updates well in advance of what others would. He has a particular gift in outlining and explaining technical issues in a way which people understand. And we're really excited to bring to you today to give you an update on these measures. Last night when I asked him to put a bit of background on himself, he said, just tell everyone how much of a legend he is. So there, Andrew, I've done that. It's proud to have you here as part of the Shakes team and everyone who's joined in. Please, I look forward to hearing what he has to say. So without further ado, Andrew, over to you.
Thanks very much for that. I'm not quite sure I can live up to it, but we'll see how we go. So good morning, all. As Stu correctly points out, the JobKeeper, which is certainly the one that we're probably getting the most queries on at the moment, passed into law about 10 o'clock, I think it was, last night. And some of us have already run a training session on this for some people this morning for 2 hours. So what we've got here is about, in technical content, if you're presenting this, probably about the highlights. We have got the chat and the Q&A panel open, which some of you have already accessed. And between Stu, Josh and Leanne, hopefully if they've got them open, they can monitor those, any queries that come through on there, and they can filter them to me and we can take some questions. What I'll try and do is we're going to talk to 2 or 3 key areas, and what I'll probably do is at the end of each of those areas, I might just open it up for any queries, presuming that some people can talk in. Is that correct, Tony, that people can talk to me or not?
Yeah, that's correct.
That's correct. So some of you will be able to ask questions as we go through. I am going to try sharing my screen now, which has, don't panic about this, it has a little PowerPoint presentation. It's 5 slides long, and it's primarily a prompt for me so that I don't forget to go through the key things that I wanted to go through. So without any further ado, I will try and get this up and running. So with any luck, you can see my PowerPoint presentation in front of you. Would that be right? Normally I'd ask for thumbs up, but since I can't actually see anybody except my fellow panel members, you guys can all see that? All good? Cheers, guys. So the first thing I wanted to go through, was just, these are the key things that I just wanted to mention that are absolutely sort of new. You can see the first two are JobKeeper and the commercial leases stuff that were announced literally in the last 36 hours for commercial leases and the last sort of 12 or 13 hours for JobKeeper. So they were announced a couple of weeks ago, but we've been trying to provide advice without any legislation. We now have legislation, but one of the things that will come out of the discussion we're having is, because this is such massive legislation, normally ledge of this type would be rolled out over a 6-month period where the government would put it out for discussion. We'd all come back and tell them all the mistakes they'd made, and then they'd correct them, and then they'd put the final version out. Because of the nature of the crisis that we're currently in, none of that review has occurred. So what the government has done is given the ATO a lot of leeway to basically interpret the law and to basically implement the rules in any way that the ATO sees fit to some extent. So what that means is there is going to be a degree of commissioner's discretion and a degree of working around some of the parameters we've got. But if we just start with JobKeeper, which passed yesterday, I'm not going to assume, but I'm just going to run through the very, very basics. Most of you will have be varying degrees of familiar with this, but the JobKeeper is the one where people get $1,500 per fortnight for their employees if they are eligible and if the employees are eligible. So I just wanted to mention that just a couple of things with this. To be an eligible employer, I'm sure some of you are aware that you've got to have had a reduction in your turnover of at least 30%. And and that's assuming you've got less than $1 billion of turnover. For those of you with more than $1 billion of turnover, we can probably have a separate discussion. Would there be many of them, Josh and Leanne, looking at you two?
Yeah.
Not too. Yeah, so it is a different parameter for those, but for most of us, it's going to be a turnover of less than 30%. Now, I'll come back to what that means in a second. I just want to go through these. And then it applies to your employees. In order to be an eligible employee, they needed to be an employee of yours as at the 1st of March. They needed to have been at least 16 years of age and either an Aussie resident or a 444 visa holder, which is the New Zealand special category visa. If they were a full-time or part-time employee, that's enough. If they're a casual employee, they have to meet those, but they also have to have been a casual for at least 12 months. One of the other things that we will mention as we go through this is you'll notice there it also says they must give the employer the required notice. There is a requirement under these rules that to claim the $1,500 per fortnight for your employees, the employees must consent to being part of this scheme. You would wonder why they wouldn't, but it's more of a double check from the government's point of view. One of the important things to understand with this scheme is the government was looking for a way to get money to employees. And rather than get that to them through Centrelink, which is already overrun, they've effectively reverse engineered the payment system so that you as the employer are effectively acting as Centrelink in this matter. Now, what that means in practice is the government is giving you money to give to your employees, and that sits slightly separately to the normal payroll system. So this does introduce an additional level of reporting obligation, and there's no real way around that. And I will try and explain that to you in the next few minutes, just as to what you've got to do in the short run. And this gives you a little bit of an outline of some of the things you'll need to do over the next few days or so. And what you'll see on that is, in order to qualify for these measures, the first thing that you have to do is you have to register through the ATO website. 700 and something thousand. I'll get to some of those questions there. I'll get to in a second. So one of the questions I've got there, which goes back to those original rules, is around employees working for 10 months. If those employees were part-time or full-time, as at the 1st of March, there is no length of time requirement. If those employees were casuals, they must have been casuals for 12 months as at the 1st of March. If you've got casuals that you've cut their hours or reduced their hours to 0, they will have to go through the job seeker system, which is the Centrelink system. And I am going to have to say, I'm getting so many queries, I'll end up just getting sidetracked. So I'll just keep talking. We'll come back to some of those queries as we go. So basically what I wanted to do with this one, I don't want to bog people down with detail, but I just want to focus your attention on a couple of things here. So hopefully you can all see that document. In the top left-hand side, it talks about the 30%, because one of the questions we've been asked by a lot of people is, how do I prove that my turnover has gone down 30% when, for example, it might not have gone down 30% yet, because the impact of the crisis is happening now. It didn't happen for the quarter ended March, if that makes sense. And what that allows is it will allow the Commissioner of Taxation to adopt different methodologies. Prima facie, what you're supposed to do is, if you're a quarterly lodger of your BAS, you're supposed to look at the first quarter of 19, compare it with the first quarter of this year, and if you're down 30%, you're sweet. If you're a monthly lodger, you look at March last year and you look at March this year, and if you're down 30%, you're sweet. If, on the other hand, you aren't down 30% yet, there are going to be other methods that you can use, such as forward estimates, that you are able to provide additional information to the ATO. So, for example, my pub traded until the 28th of March, so my turnover was fine, but since the 28th of March, it's literally dropped to 0. So clearly it's going to be down 30%. Do I qualify? The answer is that there will be an additional document that you can send to the ATO, which will allow the ATO to determine that you do in fact qualify. And we understand, the ATO documents are not out yet, but we understand that the thrust of the ATO is that they will allow you to self-assess that, and then they will come back later on and check whether your self-assessment was in fact adequate. So the 30% thing does, for a lot of clients, requires your quarterly information to be up to date, but there may be the possibility that with some forecasting, we can still qualify for those anyway. Now, the other ones that I wanted to, and for people asking, what if I've been trading less than 12 months or less than 6 months? Again, the ATO has a discretion to accept other information and allow you into the JobKeeper rules, but that is not specifically in the legislation. What the legislation does is it gives a discretion to the ATO. Because the legislation only went through last night, the Commissioner hasn't issued his list of those discretions. But what we do understand from Treasury and the ATO is their initial approach is to be concessional and to get as many people into the system as possible, and then to weed out the ones who got it wrong at a later date. Okay, so that's probably the easiest way to look at that. Next one down, top left, it talks there about requirement to pay $1,500 by the end of each fortnight. Now, these rules come into effect on the 30th of March. So the first fortnight ends on the 12th of April. The second fortnight ends on the 26th of April. Now, the way that the system works, and this is the issue about when you'll get your money from the government, the system pays you the money no more than 14 days after the end of the month in which you paid it. Let me explain that. You're paying amounts in April, so by the 14th of May, and it will likely be earlier than that, the Commissioner will pay you the amounts you're entitled to. So if you had one employee and you paid them $1,500 on the 12th of April, and then you paid them $1,500 on the 26th of April, you'd be entitled to $3,000, and that will come to you in early May. Now, there is an issue that arises there, and that is, what if I can't afford to pay the money now, but I've got to pay it before I can get it reimbursed? And that's taken account of a little bit lower down, where it says that there is a discretion. The heading there is on the left side, transitional discretion. The Commissioner can pay the amounts even though you might not have done everything that you're supposed to have done. So in other words, there is a significant discretion for the Commissioner to I'm just sorry, I'm distracted by various, I've got messages coming on my phone and on my screen. So there is a transitional discretion where the commissioner is going to be able to say, look, you didn't do everything you were supposed to, but we can pay you anyway. But prima facie, this is a reimbursement scheme where you continue paying your employees at the $1,500 amount or whatever you're paying them, including the $1,500. This $1,500 a fortnight has to be reported as $1,500 a fortnight to each of the relevant employees, and then the commissioner gives you the money back. So there is potentially a cash flow funding issue there that might need to be addressed. And I presume Josh and Leanne have probably looked at that or had that discussion with people. It is a bit of an issue. It looks like in this first month there might be some discretion from the commissioner, but going forward how that works is still to be determined by the commissioner. Josh and Leanne, did you have anything to say on that?
Yes, all our clients are sort of in very individual circumstances. So we've been talking to all our clients, our phones have been ringing hot, and we've been talking to them and helping all our clients through their own particular circumstances.
Yeah, no worries.
Yeah, there's going to be some cash flow implications where, and I believe the Treasurer and the government are fielding a lot of questions, so there might be something additional come out that gives us a little bit more guidance in the short term on the fact that you need to pay pay the JobKeeper amounts before you receive the payments from the government. That's obviously probably going to be the main cash flow or main issue surrounding this, I believe. So, yeah, hopefully we get a little bit more guidance on what is done where the business just doesn't have the cash to pay their employees for potentially a month before getting the JobKeeper payments.
Yep.
Just on that, I'll jump in. The common sense is going to prevail. There is no way if your business is shut that you'll be anticipated to be funding that, because if you're shut, you won't be able to fund it. So we will work through the ATO guidance when it comes, and then speak to your advisor. If your advisors ask, speak to us, and we'll have a clever way in which you can deal with it. Simple as that.
I think that's correct. There's a lot of information out there that will focus, particularly over the next few days now that the ledge is in, that will focus on the strict wording of the legislation. But I think it's very important to understand that even in the discussion in Parliament, there was a lot of reference made to the fact that the Commissioner of Taxation will have a lot of powers to administer this. So this doesn't work, the Commissioner can step in and fix it, with the focus of the government being that we want to get people money. So if you look at it from that point of view, I think Stu's exactly right that this will be resolved in a practical manner in a lot of cases, but that may from time to time require an additional bit of information to be provided to the ATO. So in answer to some of those questions that are coming through on when do you have to pay, as I say, technically there is a requirement to pay this fortnightly, but we believe that in all likelihood, the Commissioner will allow that to be reported as fortnightly, but to actually be picked up at the end. So you've got so some of the other queries that are coming through. If you're currently paying an employee, say $1,000 a fortnight, it is correct that those employees, assuming you qualify, will get $1,500 a fortnight under this measure. And as an employer, you are required to pay the full $1,500 to the employee. It's also true that the $1,500 is subject to PAYG withholding. So it is, in that sense, salary, and it is subject to the normal PAYG withholding on $1,500 a fortnight. But oddly, the $1,500 that you pay is not subject to superannuation guarantee. So you can either pay it on it or not. That's up to you. Was there any other questions you've seen there, any of you guys, that you thought we needed to answer on this section?
Potentially the one on directors that don't receive wages or right. Getting trust distributions. Andrew?
So there's a specific provision in the legislation that allows these rules to apply to sole traders But then that's been extended to people who work through a trust or a company, and you don't pay yourself a salary, but instead you just pay yourself a trust distribution, or you pay yourself a dividend for the services you provide. Now, it's important to understand that this only applies to people who are working in a business and not paying themselves, as opposed to someone who has an investment company or an investment trust and they just pay a distribution. So this is me running a shop. I'm working in the shop 4 days a week. I'm providing services, but I'm not paying myself a salary. Instead, I get a trust distribution or a dividend. In those scenarios, you will be able to nominate one of the individual trust beneficiaries. So if it's a mum and dad business, you'll only be able to nominate one of either mum or dad. And if it's a partnership similarly, you'll only be able to nominate one of the partners. But one of those people will be able to be nominated. They will become an eligible JobKeeper, and they will get the $1,500 per fortnight paid to them through the business. So I think that answers that question, doesn't it, Josh?
Yeah.
Yes. Yep. I'll come back to those quarterly ones in a second, just a sec. So I'm just having a look at some of those queries as we go through. So yeah, with an employee who earns more than the 1,500, assuming you qualify for the benefit, you can continue to pay them the amount in excess of the 1,500 yourself, absolutely. And that amount will be normal wages, so that'll be subject to PAYG, and it will be subject to super guarantee. But the 1,500 sort of stands alone, still subject to PAYG, but somewhat separate from SGC. And in answer to the question of annual leave and long service leave, what I will say is this. One of the biggest sections of the legislation that went through last night was a massive amount of changes to the Fair Work Act. Because there are all sorts of things going on under these rules. For example, you could ask an employee who normally does job X that's no longer available because you don't have customers. You might ask them to do something completely different, which normally attracts a different income level. You might ask them to work different hours. All of those things would normally or potentially be in breach of the Fair Work Act. So there's been a significant waiving of that act. And a significant varying of that in a whole lot of circumstances. But if you've got specific situations for specific clients, you may have to look at them, you know, on a case by case, unfortunately, because the variations were significant. Have you guys, Josh and Leanne, have you looked at whether, and I'm not trying to put you on the spot here, I should say Stu, but I can't see him, so I keep just doing the ones I can see. Have you guys looked specifically at annual leave and long service leave? So this would be a scenario where I've got someone who normally works 40 hours a week. I've put them on 10 hours a week. Are they still accruing their normal annual leave, long service leave and sick leave entitlements during that period?
Yes, they are.
Yes.
So during this, even on stand down, they still accumulate their entitlements as well as through the JobKeeper payment.
Yes. Yep.
Yeah, I think that's what the legislation came out with yesterday, that yeah, your entitlements continue to accrue as if you weren't on the JobKeeper.
Yes. And then it was shortly after that where I started reading some of the stuff, and I realised I needed an employment lawyer to actually be sitting next to me to understand any of what they were writing. But anyway, no, the $1,500 is not prorated. Oh, so the question there is, I presume, is it prorated with regards to leave entitlements? So if someone is stood down, my understanding is no, isn't it?
Yeah, correct. Yeah. No, it's for the normal contract of employment.
Correct. So they would just be accruing. Oh, there he is.
There's Stuart.
Nice to see you. He's stationary though. So anyway, so yeah, I think those are the things. Those are the main areas of JobKeeper that. There is going to be some registration requirements. So I incorrectly referred to, not to Shakes, I referred to someone else earlier, sorry. It was the Shakespeare one that went out. One of the things we are going to have to do is register with the ATO, and then over the next week or so, we are going to have to fill in a form to the ATO, which we don't have yet, which will allow us to state that we are intending to use the JobKeeper system. And that needs to be done by, I think it's the I think you've got the 24th, it's the 24th or the 26th of April that needs to be done by. And it's that will trigger the entitlement payment in early March. The other thing that may not be mentioned in there is this consent that we have to get from our employees, but I think that's going to be a given. I don't think it's going to be very hard to get something from an employee that tells them, if you sign this, you get $1,500 a fortnight. But anyway, it does technically need to be held on file. As a sole director on payroll through Xero with single touch payroll, can you advise if this will be possible to apply for? The short answer is, if you're a sole director and you're working in a business, yes. Anything else? Anything else on that one, particularly Stu or Leanne or Josh or anyone else that you've picked up? No?
I've got a question here. I'm trying to keep employees on as full wage as possible. Can I reduce their wage by the $1,500 that comes in to assist keeping their wages at full amount? Well, what this is, it's a subsidy. Them, as long as you pay them more than the $1,500, you will get the $1,500 back from the government towards paying their wages. If it's less than $1,500, you have to top them up to the $1,500.
Yeah, you top the employee up. So if you've got someone on $1,000 a fortnight now, you can keep paying them $1,000 a fortnight, but when the $1,500 comes to you, you'll have to give them the extra $500. Yeah. Yep.
But a lot of the work we are doing is making sure that you do look at your wages, look at your payroll, look at your opening hours, restructure where you can to ensure that the net wage cost to your business is as low as possible. So that's some of the work we've been helping out clients with, and being proactive with that can get really substantial wins just from an ongoing payroll cost to the business perspective. So have you got any question on that? Let's take it offline and speak separately.
Yeah, there's some of the questions there with regards to how do we work out the turnover and so on. Probably best discussed with whoever the individual person you deal with, but we understand that the commissioner is going to have a broad discretion here. So what was you had a long answer to one of these earlier on, Josh, which I didn't read because it was long. Did that answer?
No, that's all right. There was one you pretty much answered anyway.
Okay,
Andrew,
yeah. So broadly, just understand that if you haven't quite seen the 30% drop in income yet, but it's inevitable because your pub's closed or your restaurant's closed, there is going to be a mechanism whereby you can ask for these rules to be applied to you anyway. And we assume at this stage that will be a self-assessment of your anticipated turnover. So I wouldn't panic about that at this stage. In respect of visa holders, yeah, the government's made it pretty clear that if you're not an Australian citizen or Australian resident, there's a very, very, very limited group of people who are entitled to qualify for this. And we understand that there's a lot of people who've been here on temporary visas for multiple years and they won't qualify. And we understand that those people are not happy about it, but that's the way the law's written at this point. Commercial lease. These were announced, really they were discussed yesterday, but they were announced late on Tuesday. So this is just, I don't know which side, I suppose most of our clients would be on the tenant side, rather, I suppose there'd be a mix of both. The issue here is that where you are a tenant or where you have a tenant, and that tenant has meets the criteria for JobKeeper and has turnover less than 50 million, they are going to be entitled to relief from rent payable under a commercial lease. The underpinning principle is that you will have to give them a proportion of rent relief equal to the proportion of reduction in their income. So using a simple example of that, if you've got someone who's got a 60% loss of turnover, they're entitled to a 60% rent relief. Now we'll come back to the mechanics of this in a second, but if you've got a 60% loss in turnover, then basically you would have to go to the landlord and say, I can't afford to pay. The landlord and you are supposed to act in good faith and try and come to an arrangement. But the underlying principle is if you can show a 60% reduction in turnover, then you're able to get a 60% reduction in your rent half of that will be a waiver of rent, and the other half will be a deferral, with that deferral to be repaid after the virus crisis ends over the term of the lease, or 2 years, whichever is the longer. So if you've got 6 months less on your lease, you're going to get a deferral. The deferral will be paid off over 2 years from whenever the government declares the crisis over. Does that make sense, everyone? Now, obviously, there are some issues here. There are multiple issues. One of them is, how do you prove what your reduction in income is? And that's got to be entered into in good faith. But it does mean that if you're trying to negotiate that with your landlord, you are going to need reasonably good financials to go to them and say, here, you can see that my income's dropped. The other one is, what about landlords who can't possibly accommodate this? There is some provision made for that, but there isn't enough provision, in my view, if you're a landlord, because basically that's the underlying principle. So the landlord can say, look, I can't afford this. Can we come to some other accommodation? But if the tenant says, no, that's the best I can do, then you're off to arbitration in the Rental Tenancies Tribunal. And the underlying principle is going to be that one that I outlined. And the best the government can do for landlords is say, well, perhaps approach your bank and see if they can give you some relief. Anything else to add on that, guys? Or because that will be an issue for some businesses, I suspect. Okay, now the other one I wanted to mention was the cash boost. So this is the one that now feels like it's old, because it came in all of about, what, 3 or 4 weeks ago. So this is the one that allows you to get a credit in your running balance account against PAYG withholding. It's paid through the activity statement system, and the legislation assumes that you lodge BASs either monthly or quarterly. You've got to be turning over under 50 million. It's triggered by the lodgement of your BAS. So in simple terms, you lodge a BAS this week. The BAS shows, say, $20,000 of PAYG withholding due on your employee's wages. That goes through this week. You're a quarterly reporter. By the 28th of April, assuming you're eligible, a $20,000 credit will appear in your BAS, in your running balance account. So and you guys can correct me if I'm wrong here, but what I believe we're advising clients to do in that scenario is not pay the 20,000, hold on to the 20,000, create a liability of 20, and then in a couple of weeks' time, when the credit arrives in their account, that will reduce their liability to nil. Is that right,
Yep.
Guys? Yep.
That's
So
right.
that would mean that you're keeping the 20 grand that you otherwise would have paid over the next week or two in PAYG withholding. Now, that's how it works if you're a quarterly payer. Now, if the amount that you would have paid this quarter was less than 10 grand, you'll get an instant 10 grand credit. If it was more than 50, you'll get 50. So 50 is the maximum you can get in this first period through to 30 June. If you're a monthly lodger, it's a slightly more convoluted system. You multiply the amount by 3, but ultimately you get a credit. And again, the minimum credit is 10. The maximum credit is 50. If you don't use the full 50 in this quarter, you'll be able to use it during the following quarter. And then whatever you've used in those 2 quarters of that up to 50,000 credit, you'll get that again during the period July through to September. So you get a doubling of it. So the potential cash benefit to you is if you pay 50,000 of PAYG between March and June, you'll get 50,000 of credits against your PAYG between March and June, and you'll get another 50,000 of credits from July through to September. Now, this presumes that you keep trading through that period, but let's assume that. Okay, so it's 100,000 of total benefit. Any comments at all on that, guys? Or
No, Andrew, that summarised it pretty good. I guess you mentioned it pretty clearly that it's sort of the forgotten benefit, but it is really significant for clients. So really the application is for any business that really traded profitably through to the end of March or February, and expects to still hold a profitable position through to 30 June. And also those that are trading, there's huge benefit, but you typically need to do things with that one. It's not one that you can sit back and just expect to happen. So please engage with us, get your numbers up to date to the end of March, and we'll have a look at it. Because, yeah, like Andrew said, it's potentially $100,000 benefit, minimum 20, and every little bit helps. So really important that you speak to us on that one.
It's really important that all your numbers are up to date and you lodge your BASs in that, especially from the JobKeeper point of view with all the new compliance requirements. And that's what we're there to help you with. So just contact us and we'll, as I said, everyone's different and we're maximizing everyone's position.
Yeah, so just a couple of the questions that are coming through are kind of variations on a theme. So I just want to make it clear, this is just going back to JobKeeper because we still seem to be getting a fair few queries on that. So JobKeeper is the one where, whoops, that's no good. JobKeeper is the one where you get $1,500 per fortnight. Now the scheme starts on the 30th of March, but you won't receive any payments until at least the first week of May. And the first fortnight ends on the 14th. Is it the 14th or the 12th? I think it's the 12th, actually. The 12th of the 4th, 2020. And the second fortnight, therefore, the 26th of the 4th. So technically what you would be doing is paying, I mean, if you had one employee, $1,500 on that date and $1,500 on that date. If you got more than one, multiply it by the number. Now, we understand that the problem is if you've ceased trading, you're not going to have that $1,500 to pay the employee, and you're not going to get the money back potentially until the first week or so of May. So the government helpfully suggests that you can go and get a loan from your bank to cover the shortfall, but there is provision within this ledge. So in answer to those questions of when do you get the money, yes, the ATO won't have determined your eligibility yet, and so there is that there, but we're assuming that you would only be making this claim if you had a reasonable view that we were going to be able to sustain a claim. I think that would be fair, wouldn't it, guys? Is that we're someone who's running a business that's had a 50% leap in turnover because they're in a business that's benefited is probably not going down this path. So there is a timing difference. In answer to the question about casual payments being irregular, if your casual employee qualifies, they've been a casual for more than 12 months and they were engaged on the 1st of March, yes, they qualify for $1,500 per fortnight, even if you might have only given them 2 hours in some fortnights. Sorry? Yeah. So that is quite generous. There is, for those of you who might be going, aha, there's a chance to create some cash flow here. There is a specific anti-avoidance measure in here that says if you do anything solely for the purpose of trying to get into these concessions, that we can knock you on the head and not allow it. So just be a little bit careful. On the other question there of not being an employee, but have taken drawings out of company profits, yes, you should. If you're a director of a company and a shareholder and you're working in the business, so you're actually doing work in the business, so it's a trading business that you're working in, you will be able to nominate one of those shareholders or directors as an employee for the JobKeeper, but only one. So if it's this sort of husband and wife type business, you'll just have to nominate one of you. Any other queries on any of that?
And it's really important that sole traders can also apply for the JobKeeper, and there'll be more information which the ATO will supply on how you can claim that as well.
What if you aren't trading through this period? Will you get that much benefit from the cash booster? The answer is yes. If you get a cash booster payment, so say in the March quarter you paid 20 grand, so you get a 20 grand credit, well, your benefit will be that you won't have to pay the 20 grand that you otherwise would have paid in March, so you'll be able to keep that. The other benefit you'll get is that you'll get that 20 grand again. So assuming you're still, you're not trading, but the business is still operating, so you haven't shut it down, you would still then be able to get the other 20 grand after July. So from July through to September, you'd get the 20 grand as a credit again. If you had nothing to offset that against, so you had no liabilities, you will get that as a cash refund. So it does have some value. The cash boost is automatic if you lodge BASs, and those BASs have amounts showing as as subject to PAYG. So there are other people here who know the label numbers better. Is it W1 on a BAS?
Yeah.
If you put something at W1 for wages, then it will trigger it. Now, there is, though, a group of you who maybe, I presume we would have some large withholders who are paying weekly. Would that be right, guys? I'm just looking for, because those people who lodge weekly are not lodging a BAS with a W1 or a W2 on it, because they deal with it through the single touch payroll and the weekly reporting system. So what the ATO has said for those people is they will still be entitled to it, but we'll tell you what the mechanism for claiming is later. So in other words, this is a classic example of when they've written the ledge, they haven't thought of something, and they've given the commissioner a wide discretion to fix it up, which is back to Stu's earlier point, that the whole aim here is to be as concessional as possible, but sometimes we're just going to have to work with the ATO to get that outcome. Okay. That's a long one. Can someone else read that and tell me what that...
The tax commissioner's got complete discretion. So if you have a lumpy income and in then one particular month you can't prove the drop in 30% because of an extraordinary event, then you can just apply to the commissioner and give him the cash flows and that, and he'll prove it.
Yeah, the ledge specifically says that the commissioner will have the ability to accept whatever additional information he deems necessary, and he will be able to implement whatever tests he believes are useful and necessary. So in other words, everything that the ledge didn't think of is in the hands of the commissioner to fix, but the commissioner has been acting in these matters in a pro-taxpayer favour. There's a first time for everything, but he has been acting in a very pro-taxpayer. The commissioner understands his role here is as a de facto Centrelink to try and pump money out into the economy. So I don't expect we're going to get a huge amount of resistance from the ATO until they need the money back in a year. then they might nibble around the edge. So if you've registered, so for JobKeeper, if you've registered through the ATO's website, which over 700,000 businesses have, as soon as the ATO's forms that you have to fill in are ready, they will be emailed to the address that was registered. So if it's xyzpaint.com, if you've registered there, you'll get an email at that address, I would imagine over the next few days, saying, we know you've registered, you now need to fill the following form in, and if you're intending to claim for April, get that to us by the 24th or 26th of April. So that will be coming soon. We expect over this Easter weekend that we'll get a whole lot of stuff from the ATO uploaded to their website. As I said previously, they aren't legally able to upload anything until the ledge goes through. So that was late last night. So does the cash boost have to be repaid? Is it a loan? No, it's a one-off windfall gain. And for those of you who are more technically minded, it is non-assessable, non-exempt income. So it is income that's not taxable.
As well as the cash boost is also tax-free income. So both of the stimulus measures are tax-free.
That's right. Yep. Okay.
All right, Andrew, that was more or less most of it, yeah?
Yeah, that was most of it. There was
thanks. That was really insightful update, mate. I guess in summarising for everyone there's a bunch of questions still coming through. We have set up an email address, stimulus@shakes.com.au. If you've got any specific questions that you wanted to ask, and we'll get back to you on all of them. And I guess from our point of view, most of your clients, so you understand the type of client base that we look after. It's private business, and as I said at the start, this has impacted many, and it started back in February for us, like I said, with the travel agents, and extended to almost every industry. We do anticipate that everyone will be impacted in some way. Preserving working capital is absolutely key. So keeping your cash reserves and having them available to get you through this time. So make sure you maximise the stimulus benefits that are available. But there are a significant amount. It is quite technical. Andrew does keep it quite simple, but there is action that needs to be taken in order for you to get the benefit. So whether it be the JobKeeper, the POIG benefit, cashback, there's a bunch of other measures we've been helping clients with: seeking rent relief, deferring ATO payments, so lodging your stuff but getting it deferred, accessing new loan facilities if you need them. The banks do have some government-backed loans, but also they've got a bunch of other concessions they haven't yet come out with. End of the month, we're expecting that. But there'll be a bunch there that you'll be able to access. And then, of course, pausing your loan repayments where you need to, pausing your asset repayments. The bank and everyone are really understanding at these times, so take advantage of it. Act now, and act while you can. Action's key. So from our point of view, we're imploring all of you guys, get your numbers up to date to the end of March. That'll at least give us a chance to get the best possible outcome for you guys. Get an understanding of what your position is going to be over this restriction period. So the next 6 months, what the cash flow is going to be. If you're going to be losing or making money, what's that number? So then we can actually act and actually take decisive action to get you through. I guess the other thing we've been talking to clients about is just making sure you reduce your non-core spend where you can. Review your insurance arrangements. So speak to your broker. If you don't have a broker who's speaking to you, then come and speak to us, and we'll point you in the right direction. And then, of course, preserving your brand, preserving your business. There's never been more people on social media and wanting to connect because they need to. So it's really important that in any way you can, just to stay connected with your clients, whether it be if you're a gym having at home classes, or whether it be your hospitality business, takeaway type options, or even just staying in touch on social media with some regular updates. We think those that keep their client base connected will be the best chance to get through and have a win when all this subsides. So there's a bunch of stuff happening. It's moving all the time. We are here for you. Please reach out if there's anything you do need, and we're in it together. Yep.
Absolutely.
And if I got too technical in any of that, apologies, but I tried to keep it simple. There is a bit in there, but yeah. Okay, good. Thanks.
Thank you.
Thanks, guys. Thanks for checking in.
Most importantly, everyone must please stay safe, and we're there. We've got your backs, and any questions, anything at all, just contact us. We have been contacting everyone, but don't hesitate to contact us. That's what we're there for. And everyone, hope you have a good Easter weekend, and it's going to be a different one for sure, but just enjoy time with the family and just stay well, and everything of the best.
Yes, thank you.